Hey, welcome back, everybody. So, this is going to be the watch list for Monday, April 7th. And after a very, very turbulent week in the market with unrelenting selling, are going to have to just honestly, I'd say, sit and be patient. So, we are right now at an inflection point where we need to see is the continued selling going to persist? Or are tariffs possibly going to be rolled back? And then also being very in tune as to how other countries are responding. So, the first night of the tariffs, when they went on and they were announced, the market sold off approximately 4.5%. The next day, China imposes tariffs on the United States as a retaliatory, and the market sells off almost 6%, so over a 10% drop within a single week. I don't think the selling is over because primarily we don't have any clarity. We don't have any clarity as to what's going on or how long these are going to last, how jobs are going to be impacted, how the overall economy is going to be impacted. So I think patience is going to be a virtue in this market. Additionally, the VIX closed on Friday, trading up to 45. Now, that is not an area where you want to be trading any kind of large size of contracts whatsoever. We really need volatility to come down below 40, get below 30, and then get back to 20. But if it keeps escalating higher, the market's going to throw out the baby with the bathwater, and we probably have another 5 to 10% to the downside, if not more. So, economic news. I don't think this is really going to impact the markets one way or the other. I would start listening to what the overall Fed governors have to say. Now, Jerome Powell on Friday basically said, yep, we see what's going on. Yep, we hear everybody's concerns. Nope, we're not going to do a thing to save this economy. Essentially, that's what he said. We are not going to lower rates. We are not going to come in and lower rates to head off inflation and then run the risk of the administration taking off all the tariffs and then inflation still ends up going through the roof again, right? So it's going to be a very delicate balance. Now, the market is pricing in 5 rate cuts this year. A month ago, we were down to 1 rate cut, maybe 2 rate cuts. So you can see that the panic is very, very high. We have consumer credit coming in. You should also be done trading, on Monday. Tuesday, we have the NFIB optimism index. This is not going to be good, right? There is nothing optimistic about this market from any perspective. Wednesday, we have wholesale inventories, some more FOMC speak, as well as the minutes from the March meeting. But Powell spoke on Friday and basically said, we're just going to sit and watch and see what happens. Now, Thursday, we'll have to watch the initial jobless claims. On Friday, jobs numbers came in pretty darn strong, which is a good thing. But then we're also going to start to see more inflation numbers. So the overall consumer price index, CPI, core, and a lot more Fed governor speak that's going to create a lot of noise within the market. So Friday, we're going to wrap up with overall PPI, again, which is going to be the producer price index. What is it costing manufacturers to actually manufacture goods and services in the United States? And then we're going to have consumer sentiment, which has been just blowing through estimates to the downside compared to what the market was thinking. So let's take a look at a couple names. I'm not going to, spend too much time on this. Clearly, we are in a correction territory. If I took a fib from a pivot low back here on October 26th of 2023, all the way to the market high, we have now given back almost 61% of all of the gains. Now, if we fail this fib in QQQ, which is the NASDAQ tech-heavy sector, I would expect that we will start to press lower levels of 414, 410, 402, ultimately heading down to this 786 fib right here, where we could have one last opportunity for a bounce to possibly move higher. So we're going to go ahead and I'll mark that so that if I decide to remove the fib, we'll at least have that price level. Clearly, we could see some interim bounces where the market was pushing its way higher, But right now, the market is just literally selling off without any repercussions as to what might happen going forward. So we are right at that 618 fib. Again, we fail this. Traditionally, we will go down to the 786. Now, mind you, on a lot of your charts, you're going to have to start putting gap fills to the upside. Remember, we only do a gap fill on the daily time frame. So if you were to go to a daily chart, what you will be looking for is where did one candle close, where did the next candle open? You will use the wicks to actually put your box there. Now, this will act as a magnet eventually on the way back up, right? And that's what we're going to want to be aware of. So normally when the market will recover, it will use the bottom of the gap fill and reject back lower, or push into the gap fill, bounce in it to actually head higher. So clearly right now we're sitting around 422. Would not be surprised if the market takes this down to 400, maybe to 385, and then we could get somewhat also of a relief rally bounce before they sell into it again. And you'll see that that's what they did here, right? We came down to 468. They pushed it up to 492 and then sold heavily into it, pushed it up again, very heavy selling. At some point, we are extremely oversold, but when there is fear in the market, there is no reasonable sentiment as to why it should bounce at any of our levels. So let's take a look at SPY if we could. Again, we have gaps to the upside that will need to be filled. Right now, we just blew through the 50 fib, which is at about 511.37. You can see that right here in the green line. We are on our way to the 618. So clearly QQQ has given up more gains to the downside than SPY has, which is the broader market. But my fib is from this pivot low again in October of 23 all the way up to the market high here. We blew through this level. I would not be surprised if we come down to 494 before we have another very heavy pivot to maybe reconsider, which is also approximately halfway between the 50 and the 618. So just going short into the market, you could get caught up into a reversal in a moment's notice. So we need overall volatility to come down. Let's take a look at the VIX if we could. Volatility going through the roof. I used these price points from prior points in time. You'll see volatility hit this high in August of 2024 all the way up to 65. We are above what I'm using now are daily targets. So I'm using these daily targets here to say where might price actually reject. And we were all the way up here at this level back in June of 2020 in the middle of the pandemic. That's where we are sitting today. So I would watch this in a lower time frame to see, can we get a close below? Now, we were up here back on April 4th, and then we were also here earlier on the 4th, right, where we're pushing up, but we are now still in an upward trend. So if we bounce here and head higher, that's what I would be highly concerned about. You can see we have demand forming. If we go to a 4-hour time frame, let's see, we probably don't have any supply till significantly higher till they actually push this down. And then remember, we can also have people buying the VIX. So you can buy options in the VIX. So while we do have sellers at a 3-hour time frame, I wouldn't be surprised if they push it all the way up to 65 to this prior all-time high in most recent history before they start to come back lower. So do keep an eye on that. As far as volume goes on stocks, I would stay with things that are highly liquid. Taking a look here at Tesla, whereas it's actually been holding up better than some of the other stocks, primarily also, though it's less than 50% of where it was trading at the all-time high of almost 500, right? So we were all the way up here at 488. This stock has been cut by 50%. We are, again, going to be breaking a trend line, so something else that you can keep an eye on a 4-hour time frame, and you'll see the trend line has broke. Okay, so now what I would do is watch and see, can they hold this 234? If not, I would look for them to retest 225, and then after that down to the 213 area, 212. Also, Apple, interestingly, was holding up better than some of the other tech stock names, but it just couldn't withstand the selling pressure. We do have a gap below on Apple on a daily that I would definitely keep an eye on. So we are failing my price level of this 187. The market right now is at 186.60, so we're just below it. And we do have a gap here that will act as a magnet at about 180. And then the bottom is at 173. So we could definitely see this on continued weakness, push to the downside. You'll see that we do have some demand, but it is going through the daily. We're about to get through the 3-hour, and then it's going to keep pushing lower. So while we do have buyers here, when the selling is unrelenting, you're going to keep dropping further. So keep an eye on that gap fill for Apple. I do like that to the downside. Amazon, interestingly enough, was getting a little bit of traction on Friday, and it did close somewhat higher than everything else. It did not close on the low. So you can see we had a push down. It held this 166. We pushed back up to 177, and now we're right back down here to this 170 level. So I think that you should definitely be watching Amazon here. Can it hold this 169.18? If not, I would definitely think that we're going to retest this 166 and then use an interim level where we have a pre-market low or a pre-market high, just as some guiding principles until we get to the next level, which is 159. So again, if we take a look at where are the buyers are all the way down here. So if we fail this level, definitely we could possibly head lower. Now also, mind you, when you're using the supply and demand indicator, you have to zoom out to a higher time frame in order to get a better perspective. And the reason for that is there's not enough candles that can be calculated on a 5-minute or a 15-minute to go back to where Amazon was trading this low, over last fall, right before the election. So definitely zoom out to get a better perspective. But again, if we break below 169, I do like puts to 166, and then again pushing us back down to this pre-market low right here. So we're going to go ahead and we'll save that one. I'll keep Amazon for something on my watch on Monday. Let's take a look at Google, and I'm sticking with the tech sector because it's got where all the volatility is right now, and it's where we have relative weakness. So you can see here that we are in somewhat of a low level area of demand. Definitely could push lower. Clearly, I don't have as many technical levels on this one, so that is something that you would want to go through and do and make sure that, again, you have all of your interim levels set as to what have we been seeing to keep trading this thing to the downside. But you'll note that we definitely have to head back further in time, which I really like this area right here on a overall 2-hour. Again, you could look at it on a 4-hour where we're rejecting it, support. And that would be the 141.64. And again, I use the supply and demand indicator that if there's no demand, we're definitely going to keep dropping lower to the downside. Interim levels here, again, you could probably just kind of keep an eye on where they were wicking it up here, right about here. You can see on 2 separate days where they were wicking it up. This is also where we are bouncing it right now. So if we fail this 144, definitely think that there's possible more push to the downside. So keep an eye on Google. Taking a look at Meta. Meta was our domineering stock that was able to hold up while everything was selling off and keeping a positive year-to-date growth number. No longer the case. We are now at this magical 500 level. And you'll be able to see that my next good level of support is at 453, which is, unfortunately, another 10% to the downside, right? We got a little bit of a bounce, but then a failure into the close. We don't have a lot of demand here. This is 45-minute, 30-minute. We get a little bit more on the 3-hour and the 1-hour that will pause it to stop between these two levels. Again, if we look left and we wanted to draw an interim level as to, well, where might Meta stop? Well, what I would do is I would use, well, where has it been resistance in the past? Okay, and you could clearly see that we've had this resistance, and it's an area to keep an eye on. It's not always an absolute definite, but this 481. And then we start to get through that, and then it kind of starts to get a little bit sloppy. And that's what we see here. And that's where you, again, have to go down to a 1 hour time frame and say, is there anything, really that I like in the interim? And there isn't. I mean, you can see how they wick it below, but then they push it up higher. So this 481 would be kind of an area that I like for a high probability setup. Let's take a look at NVIDIA. And so the semiconductors were going to originally be exempt from the tariffs. And then the White House came out and said, psych, nope, we changed our mind. We are now going to go after the semiconductor business. So let's turn off the supply and demand. You will see we are right back to where we were here in August of 2024, right around that 90 level. Look for a bounce. If we don't bounce, then 85.58 and 81.42 to the downside. Again, all I am doing is trading technicals. I'm cognizant that there's buyers here, but again, when the selling is so dramatic, it's just going to eat through them. And then you look at the overall MACD, I mean, it is just still negative momentum to the downside. So try to zoom out and look at these things on a higher time frame, which will give you a little bit of a better perspective. Walmart has been one that we've had a lot of success with, right? And what we love about Walmart are these wide trading ranges, yet it's not absolutely tanking. So I have a support level of 82.45. Right now we closed at 82.81. We'll see how this opens. But Walmart has really given you some nice downs and ups, right? Downs and ups. And this is kind of what we like to see versus just falling and falling and falling and falling because we don't know where it's going to reverse. So many of you have been trading Walmart over the last couple of days, and it's been really good to you, right? So this is based upon, again, the consumer. And where is the consumer going to go if times get tough? Well, they're probably going to look to Walmart to see if they can pick up some overall savings. So we have some good demand here on an hourly, but more importantly, a weekly time frame. So I like this 82.45 for a bounce. And that's one that I'm going to keep an eye on because we have had some overall relative strength in this name. Okay. Let's take a look at the financials. They've been clearly thrown out, even though tariffs don't impact financials, right? We have JP Morgan that has some gaps to the upside. So you'll note that this stock, was just recently trading all the way up here to $280. We are now at 200, really bouncing off this 208.83. If we lose this 208.83, definitely I think 200 is in the cards for this one. Remember, banks just tend to move slower and they're much more choppy. So you're not going to get the quick move to the downside always or the quick move to the upside. You'll be flirting literally back and forth. But you can see on a lower time frame, all we have are predominantly sellers. We really don't have any buyers, until we get to a 1 hour. And we've already pretty much started to move through the weekly. We have 45 minutes demand, and then we don't get to another daily down here to 205. So again, if the financials are weak, definitely something to look for a short. But if we get a hold at 208, then I would look for the market to go back up to this gap fill at 218. All of the banks are having gaps. Wells Fargo, lots of gaps. To the downside and to the upside. I mean, look at all of these. This is just insane. So you can trade the direction of the market based upon the gap. Now on a 1 hour, the MACD is crossing and we're getting a little bit of a buying pressure. Now I don't like this until we come back down to this gap fill for a bounce, or we can get above 61.78 to fill this gap to the upside. So I would not be trading between levels. We'll look at the same thing with Bank of America. Lots of gaps to the upside. We are below a price level of 34.48. The banks are also making 52-week lows. So the tech stocks are not quite yet doing that, but the financials are. So this could also be an opportunity to start taking a long position for when this bounce happens. It will probably be quite substantial to the upside. But you'll see that we have, just a couple bucks because these things tend to just move slower. Then the other one, Citibank, in full disclosure, I do have a long term position in Citi. This is by far my favorite. And it's my favorite because it trades at the cheapest price to tangible book value of all the banks. So this one, I think, from an equity buy of just a sit, long-term hold is good. The dividend is moving up exponentially, but banks are starting to turn, right? Whereas we're not seeing that in the tech sector. So the banks are trying to find a bottom, which could be a good thing. And then the last one I'll cover for you is going to be SoFi. Remember, SoFi trades like a tech company. It does not trade like a bank. We are, all the way back here at, $9.42. And then alternatively, remember, this also trades more like a meme stock. And the reason for that is primarily because you can buy a lot of shares, right? It's cheap. They're $8. The day traders love it. They don't have to fork over, a ton of capital. But again, a stock that's very volatile that moves at, 4, 5, 7, 10% on a overall daily basis. We're kind of stuck in a basing range. Possibly an area for you to take a bounce is going to be right here on an interim basis at about $8.93. Don't really like the reject on this one. I'm not a huge fan of, trading options in this one. But again, could be something just for, a long-term hold, as the stock was recently just at $18 not that long ago. So if we go to a daily time frame, again, what you should do is, here's a great example. I'll just do it with you. Let's go ahead and just draw our gap fill on the day from the overall candle wick low to this candle wick high. We'll drag it right. We will double check our candle highs. So this candle high was $10.22. Where do I see that? Right up here in the left-hand corner. So $10.22 was this candle high. I'll click the settings, $10.22, I'm good, okay? So I don't have to worry about it. It's perfect. The candle up top is already set, should be for this candle low, because that's where I grabbed the wick in the first place. Small little baby gap up here, again, on stocks that don't move, $20 at a time or $40 at a time. I'm not as concerned about, a stock going from 1018 to 1055. I mean, 30 cents is like nothing. So there is a gap there. We'll be cognizant of it. But again, this one's just a very volatile to the upside and to the downside. So you'll just trade market momentum. But you'll see on the daily, they pushed it down, found a floor, and then they are trying to now push it back up on the close, which is why the banks are gaining a little bit of momentum. And we'll just take this right down here to this candle low, which is something that you can definitely keep an eye on. So again, everybody, size down on your positions. We need volatility really to get dialed in here. If we don't, the order fills are very challenging. The spreads are exceptionally wide. You'll be looking at the active trader saying, okay, I'm up $300. You get filled and you actually lose 100. Because remember, you are buying the ask and you are selling the bid. And when the market is super, super volatile, the bid and the ask is all over the place. What I'd really like to see on this, again, we'll just go ahead and take a trend line, right, where we've been bouncing off of. But ideally, I really want to see the VIX get below this white trend line on a good long-term basis. But right now, we're heading in the wrong direction. So if you break below this level, what they've been doing is also bouncing it off these prior pivots, and just also watch, could they bounce it off this trend line to go higher? We need to break below the trend, break below the price level for volatility to start coming in. So with that, everybody, trade safe. I'll be live Monday morning at 6 a.m. Pacific Standard Time. We'll review some charts. But right now, you can see how we are just working ourselves clearly into this box right here, even from these overall candles. So keep an eye on it, get really good at charting, and it makes it that much easier to trade the market. So have a great Sunday fun day. I'll talk to you all tomorrow morning. Take care.